Hello traders everywhere, Adam Hewison here with your midday market report for Wednesday the 12th of June. Well, choppy markets are the nature we're seeing today with all the indices, and this reflects general investor anxiety. I think that's the key thing to look at. We'll also be looking at crude oil, some lines in the sand there we won't want to miss. Also, we're covering all the major markets we talk about every single time we do our report. So let's go right to our portfolio and take a look at the Dow. As you can see, we've got mixed results here with the Dow monthlies up on the Dow, on the S&P 500 and the NASDAQ. So the major trends are still up, but we're seeing the red trade triangle come on the weekly, meaning you should be out of the market. We've said this for some time now. So let's just go right to a chart and we'll give you that information that we look at. So here we are, we're looking at a monthly chart, but I want to go right to a daily chart, gives you a better idea. And we'll scope this into just the last 3 months. And if we put our weekly triangles, you can see they came in actually on the 5th of this month, which is almost a week ago. And since that time, the market's been boom, 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 choppy, choppy, choppy. You can see a big down day, another up day, another down day. It really doesn't know what it wants to do right now. But favoring the longer term trend would be the odds on favorite, because that hasn't turned around yet. It's still positive. We expect to see that continue. However, this is certainly an early warning signal, the weekly, and we want to be out until the market decides what it wants to do. I'd rather give up a few points here, buy the market higher if it is indeed going to go higher, than try to just guess at the bottom or a top. So let's go to our next market. That's the S&P 500. And much the same pattern there. You can see the weekly came in actually on the 3rd, 2 days before the Dow. The Dow has been the strongest of all the indices, followed by probably the NASDAQ and also the S&P 500. But here you go. This is on the 3rd, and you can see it's still very, very choppy. Apple's down today, of course. Hasn't their developers conference this going on this week didn't come out with the disruptive technology that people were perhaps looking for. I think that's a little bit too premature because they don't usually announce on their WWC, Worldwide Developers Conference. They normally announce new products and changes in September, which I would expect we'll see. But going on to our next market, that's the NASDAQ. Pretty much the same picture there. The weekly's down, the monthly's up, and you can see that came in on the 3rd, just like the S&P 500, and it's really under pressure today. We're getting down to an area where it's getting to be a little bit oversold. Not quite there yet. We have been oversold, so I think I want to watch this very carefully. But generally speaking, the longer-term trend with the monthly trade triangle you can see right here is still positive. Moving along to gold, we've just done a special 7-minute video on gold. Even though it's up today, you'll get to take a look at this video. It's very powerful, and it gives you a long-term macro view of this market and where we think it could go sometime in the future. So again, all of our trade triangles, it's showing 55, meaning a trading range means we've basically been going sideways since the 19th of May, and here we are, almost 2 weeks later, almost a month later, really haven't gone anywhere. So let's give that. Be sure to watch the special video we did on gold today. So let's go into our next market, crude oil. Now, crude oil is really, really interesting. And this, we talked about the lines in the sand, the 2 lines, very, very important lines. And I think this is what we're looking at right now. Well, the first line is definitely going to be right here. This is this area of resistance, and that comes in right around the 97 level, 97.50 level. So this is definitely this sort of line in the sand that you want to be really, really watching very carefully. If we move up here and close over this level, I think that would be a very, very bullish sign for crude oil. Now, crude oil is about 10% higher than it was a year ago. Can it go high? Yes, and it may be a black swan event, but generally speaking, the trend is mixed. Okay, you've got the weekly and the monthly negative. So you're not there yet. You're not seeing this bullish trend coming into place, and it won't come into place unless we take out this line, these lines right here. That's going to be a very, very key level. On the downside, you've got this sort of line in the sand right here, right around the 91 level. So 91 here, I would say if we see that, then that's going to be a really key level for this market. If it closes low, then I think the game's over for crude oil. Will change the pattern. But if we just clear this up a little bit and scope it out just a little bit further, you'll see the type of potential pattern that's working here. Let's just take these off and put a line chart on. So the potential here is for a market that's building a large base, and it could be just a black swan event. We've talked about black swan events, something that comes out of the blue that no one really is picturing. So this is what we're seeing right now, and this is the line that we're talking about right here. So if we need to go, the market needs to clear this line if it's going to go higher. We're not yet convinced it is going to go higher because of our trade triangles are still basically saying lower to negative. So again, let's watch this market very carefully, both on the upside and on the downside around this 91 area. That's very, very key. So let's go on to our next market. Next market we're looking at is the euro. Now the euro is a totally different picture. We've been bullish on the euro. It's up today. You can see it's really performing, I think, pretty well. New highs. We talked about this particular formation early this week, and that is the potential, the double bottom here, and the pivot point, and the potential for the market to go up to this level here. The 36.50 I think would be a good part where this market go. 36 to 37 on the upside. So you can see the trend is very clearly on the upside, and also if you put our trade triangles on there, you'll see also they're very, very strong right now, plus 100, indicating the trend is clearly up, and it has been for a while. So we like the way this market's acting. We can see it going higher to those points we talked about, 36 to 37, 136, 137. That's the number of euros that we're looking at. So it means when the market goes up here, I mean the euro is getting stronger and the dollar is getting weaker. So let's see what transpires in this trade. So let's go on to our next market, and that's it. We've done it for the day. So take a look at our new videos that we just put out. I think you'll enjoy them. There's one on gold. There's one on we're going to put this out later on today on an individual that wrote to us that I think you'll find it very, very interesting and conversational. So I'm Adam Hewison for MarketClub. Have a great day trading. I'll see you on Friday. Thanks for watching this video. I hope you found it helpful.